Bring that ass back like a boom, 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 boom.
So first things first, let's start with the S&P 500. And as you know, this is my bear charts. This is what I like to look at when I'm looking at charts. We had 4 moving averages, 10, 20, 50 in yellow, and the purple one is a 200-day moving average. Obviously, S&P 500 below all of the moving averages, which is definitely a bearish condition. Now, if we look at volume and price alone, don't look at the moving averages, don't look at anything else. I just want to take a look at the last week. So the first thing that we had here on Monday was a bounce situation. Look at the size of this week and volume being higher than the volume on Friday drop. So this week definitely shows there's some support right here from the bottoms. The problem here is that the body of this candle, the SP 500, the body of this candle is very small compared to the body of the previous day. So it's showing some support, but not a lot of strength going forward. The same thing was confirmed on Tuesday. We had a very small volume coming in the market, so no follow through on the market, and a very small body. Wednesday, we came out with the 50 point rate hike from the Fed. We had this late rally up, which was met by more selling on Thursday. And on Friday, I think it's the most important candle happened on Friday, because what we actually saw right here, and if you look at the volume, on Thursday, volume was intense selling. However, look at the week, we had like a 25% week or more. And on Friday, on lower volume, we have a very small body wicks on top and at the bottom, which is definitely showing uncertainty. There is no conviction in the bears going downwards. Also, there's not enough support in terms of volume to head upward again. Some of the fundamental data that is coming from the Bureau of Labor Statistics and so forth is looking positive for the economy and the industry. And although yes, we do have inflation that's higher than 8% now year over year, some of the fundamentals for the entire industries and sectors is coming up positive. So as I said, alongside with the internals, this might be suggesting that we are trying to hit the bottom right here. Now let's look at QQQ, and if you look at volume and price again by themselves, just as those two, I think you're going to see the exact same thing. We had huge bearish volume. That volume here on Thursday was larger than any prior volume for this year, with the exception of this is 24th of January. But we were not able to make new lows. Furthermore, we found support right here, and on the next day, followed by almost identical volume, the size of the candle is very small with wicks above and below, which definitely shows uncertainty in the market. So again, this is just volume and price analysis. I'm not saying that this is going to happen. These things can be broken down and violated, but these are just some of the clues that I'm getting for the market. IWM definitely looking weaker than QQQ and S&P 500 right now. We had a larger candle right here and volume was picking up. However, one more thing that is a clue for me that this might be coming to an end is the size of this bar compared to the size of this bar. Although we had more volume coming into this bar recorded a lower body size compared to this one. So this is definitely stopping action in terms of volume is not able to sustain the move downwards anymore. And same thing with Dow Jones Industrial. So you can see right here, we had the lower week, volume was higher than the previous day, but the size of the body is very small. And this one is actually a positive day, this one is a negative day. So even if you look at the volume from Thursday, it was lower than the volume from Wednesday in Dow Jones Industrial. So if you're looking to trade something, definitely head to Dow Jones and industry groups that are relative to Dow Jones. Um, so pretty much that's about what I want to talk about the indices. Now I want to just take a look at a couple of charts for oil, gold, and then crypto. Crypto was pretty much supportive of Nasdaq's action. It's been dropping even over the weekend, but I think that's normal. And actually, if you look at, let me just take a look at something I want to show you. If you look at the net change year to date for Bitcoin and Ethereum, they're showing, let's just put it at minus 25, so 25% drop year over for this year since the beginning of the year for crypto, which I think is pretty spectacular and is showing a lot of strength compared to Nasdaq and all the stocks that are in the tech and communication sector. So, as I said, let's go to oil, gold, crypto, and then look at the industry groups. So, looking at gold, we had this humongous consolidation right here, trying to form this cup. It broke out early this year. I've traded some stocks to the upside, and we saw another attempt, and then the rally just came to a halt, and pretty much we stopped at the place where we broke out from this high right here. So this is gold. It's looking, I don't want to say weak, but it's not looking amazing. Let's put it this way. I don't think that this is it in terms of dropping. As you can see, like volume is not really coming in right here from the lows, so it's not looking very positive for gold and silver as well. On the other side, if you're looking at oil, formed this amazing structure right here. It broke out last week on Thursday and Friday, and we've been seeing prices going up. And the same thing is true for some of the stocks that are in the oil and gas exploration sectors. So as I said, let's take a look at Bitcoin. And this is the chart of Bitcoin. Unfortunately, I only have it until Friday right here. I don't know why TradeStation is not going to chart during the weekends. But for consistency, let's just stick with those charts right here. What I like here is that we're seeing some volume showing up from the bottom. The wicks right here, again, body wicks. We saw some wicks on the downside. The body of the Friday candle was very small, although volume was higher, so not really bearish sentiment. If I look at the price right now, it's oscillating around 34 and a half, and right here it was at 36, so the true price is right around here, but still, let's just zoom in a little bit. So true price is around right here, so nowhere near the size of this wick right here. So although it's not looking very positive, we're still holding the lows right here, still haven't undercut those levels around 32,000, and then if we go below that, we're probably looking at test of the 29,000 level. But let's see how it goes. A rally in the markets will definitely help crypto. And as I said, it's been playing pretty much in accord with what Nasdaq has been doing, although to be fair, much stronger than most of the Nasdaq stocks so far. So now let's take a look at the industry groups, CNN sentiment, and then let's do a summary. Now for the top and the bottom industry groups, this week I've decided to do something else. Over the week we received a really interesting read from MarketSmith, and you know that this is the methodology that we are following in terms of industry groups and their relative strength. So let me just switch to my MarketSmith screen right here, and I'll show you how amazing this tool is. I think it's a really wise investment for any trader or investors that really want to grow. Now every week MarketSmith comes up with their MarketSmith Growth 250 list. So it's updated on Friday, and although it says Market Smith Growth 250, it actually has 300 stocks in it. And as you can see, it was updated on the 6th, which is Friday. So let's start by looking at what the screen actually showing us. So we have ticker symbol, that's position number 1. So this is the top ticker in Market Smith Growth 250 list, which is Arch Resources. We have some information right here. These are, if you're not familiar with Investors Business Daily and their proprietary ratings, these are theirs. So composite rating 99, 100, well actually 99 being the highest, EPS rating, earnings per share rating 74, relative strength rating 99, advanced, well this is accumulation distribution rating of A minus, basically A plus is the top. SMR rating, this includes ratings, earnings, sales and stuff like that. It's from A to E, so A being the top. And the industry group rank is the one that we are actually interested in. So as you can see right here, Arch is part of Energy Coal industry group. And if we look at the ranking, this is what I show you pretty much every week. So we have energy and coal number 1, and then we have number 3, which is really weird. Where's number 2? Anyway, we have oil and gas, maybe they are tied right here. We have chemicals and agriculture, gas and oil integrated. Number 6, we have oil and gas drilling. Number 7, we have oil and gas exploration, production, transportation, and shipping. It's coming back. You can see my favorite, ZIM, is making a modest comeback right here. Then we have, again, oil and gas exploration and production, oil and gas, oil and gas, oil and gas. So these are the top industry groups, and you can pause the video and look through the tickers right here on the left side. However, in our Discord server, I'll be sharing my, I have a screening filters right here, and I'll be sharing the results with you, so you see what I'm looking at and what is tradable in my humble opinion, of course. Now, if we switch the RS rating from the bottom down, these are the bottom industry groups, starting with computer, software enterprise, internet network, energy, solar. I've been eyeing an entry on SEDG, as you probably know, but they just broke to the downside. We have electric, semiconductor, we have machinery tools, finance, investment banks. So these are the bottoming industry groups. Now, one thing that was very handy in this read from Market Smith this week is another tool that we can look and gauge momentum in terms of relative strength of groups, which groups are improving and which are not. So as I said, every Friday they update it, they add some tickers, they delete some tickers, and these are the additions this week. So if we look at the industry groups right here that were added, we can actually gauge the strength of this industry group. So we have 4 tickers added from the aerospace and defense sector. These are AGRD, GDs, one that we are all familiar with, LHX, it's L3 Harris Technologies. We also look at the chemical supply. We see 4 newer additions right here. We have LLB, LTHM. We were looking for a high tie flag situation right here. We have Solaris and we have US Silica Holdings also added. We also have quite a lot of additions from the medical and biomed. You can see them, ANTH, BLTE, CNC, and also a lot of new additions from oil and gas machinery and oil and gas US exploration and production, and a couple of additions from the transportation and ship. As I said, we saw it in the Market Smith top categories as well. So again, oil and gas, more additions to the list, some transportation, some medical biomed, some chemical specialty supply, and aerospace and defense. So this is what is actually picking my attention. Then we're gonna look at deletions and we're gonna see what's actually dropping. And as you can see right here, a couple of from aerospace and defense. But if we look at commercial services, outsourcing, and computer software, enterprise, security, computer software, these are tickers that are being deleted from the MarketSmith top 300 tickers list. So this is definitely showing as computer software and services are going down, as well as finance and property, the right industry groups. You can see a lot of deletions here. So basically, we're seeing weakness in these sectors, as well as utility diversified. Right here, we have four tickers from that. So this is how I'm going to proceed with at the top and bottom industry groups in the future. If you like it, please leave me a comment. If you don't and you want me to revert back to the old way of doing it, let me know. I have absolutely no problem. I just want to find the best solution for you guys. So now let's look at CNN sentiment and then to the market summary. So this week, the CNN Fear and Greed Index reading is 31. Last week we were at 27. So in this regard, we are seeing a mild improvement. And this is how we've been going in terms of a timeline graph. Now, notice that although the markets are trying to make new lows, we're still not seeing the low of this indicator. So participants are basically not fearful yet, which is in contradiction with the American Association of Individual Investors sentiment reading. However, in terms of crypto, we are now at a rating of 18, which is extreme fear. Last week we were at 22. So in terms of sentiment, that's what I had for you this week. Now let's do the market summary. So as you saw in the very beginning, our XVest is on negative. Setups, selective to none, really. There are a couple of things that you can trade, but they're all in the oil and gas and the energy sectors. The market's definitely selling off, although it's trying to consolidate here at the bottoms. The put volume is elevated, volatility. We went as far as I think 36 on the VIX this week. And in terms of things that are just affecting the market, have in mind the rate hikes, inflation, the war between Russia and Ukraine, and the greater involvement of NATO countries going forward, as well as some sanctions in terms of cutting off oil and gas from being viable in Europe in general. And we're still in earnings seasons, quite a lot of earnings coming up again. So these are definitely things that are weighing in on the market. But again, bear in mind that bottoms are found very fast, and usually the rally backup is fast and furious. So even if you don't have anything to trade right now, search for those tickers, screen for setups, because it is right in this type of markets that the next leaders are formed. And if you miss this opportunity to get in early, some of those tickers that are very explosive will not give you the opportunity to get in and participate in their movement to the upside. So I'm not saying bottom fish, but search for the tickers, analyze the tickers, see if they're setting up proper bottoms or proper bases, trying to break out of those bases when the market is still weak, and try to get in with small positions early on. So if you have any questions, guys, please leave a comment right here, or you can just come out to our Discord server. It's a fabulous community of traders right there. We can help you with things and ideas for what to trade, when to stay out, and how to preserve your cash, because after all, this is your number one goal. Again, please like, comment, subscribe to our channel here on YouTube, and I hope I'll see you in our Discord server. Till next time, bye bye.